Hello, everyone. This is Brian Beamish, the Canadian Rational Investor, CR Investor on Twitter and TradingView, coming to you today. It is Tuesday, June 24th, 2014. Yesterday's video was quite lengthy, so first things first, let's make sure that we keep this at least under 15 minutes, but I'm going to try and just do a short one. These are supposed to be 5 to 10 minutes, so the commentary is going to be relatively brief today. As always, quick plug for the site, therationalinvestor.ca. Lots of information, lots of free seminars. Encourage you all to take a look at that. And while we're building out the pay site, you can still access all the Twitter feed information. You see that I have an interesting one here in the altcoin space that I'm looking at here today. So lots and lots of fun stuff to look at. Never a dull moment. All right, let's get on to Bitcoin. 4-hour review. Of course, we all remember this chart. Basically, year-to-date price action. Long and short of it here, we were up at better part of $1,000 back in January. Let's just zoom out just so we can all see that. And we were even higher than that. If we look on the daily charts, it's interesting. This rally on the daily charts came right up to the 38.2 fib. Off of this year-to-date chart, the rally came right up to the 50% level. So long and short of it here, there was lots of reasons for the market to take a pause there. Zooming in on this 4-hour chart, we had as well as lots of fib targets up above, we had a bullish ABCD pattern that suggested price wanted to get up here. When price did get up into this target objective, we had double top breakdown in the OBV, we had bearish momentum divergence in the MACD, and Willie was spitting up lots of stupidly overbought conditions. So again, not a big surprise we saw price back off there. On the way down, if we took a look at the entire range from the 340 low up to this 685 high, you'll notice that if we zoom in here, 38.2 became a very powerful magnet on the way down. And you can see that just this move off of this inverted head and shoulders low was the 50% level. So again, whenever you see those two fibs sort of coincide, that's pretty good indication that's where we needed to go to. Once we did that, we did put in a bit of a panic double bottom. You can see it here. I suppose I had commented dead cat bounce, and sure enough, the dead cat bounce off of this trading range here, 50% level, sitting right there at about 604, 605. So we hit that. You see that I've drawn the OTE zones here, and we never even did get up into the OTE. So from just a strictly technical perspective, that's a bit of a bearish proxy in itself. The way I see it on the 4 hours is basically we've set ourselves up for two potential trade scenarios. Basically, if this is a bear A, B, C, D, that's the blue lines, then we probably ought to take a shot down into the higher time frame OTE long zone, which as we can see is the 61.8 fib down to the 78.6 fib. Sweet spot sitting 441. There's the bear ABCD target. The bullish scenario of the current trading range resolution is a bullish ABCD. That's the red line here, where a rally from 522 up to 619 or whatever it was. And then the consolidation back to the 38.2 fib. If we do resolve out of this bullishly, then my target has to be basically a test of these previous highs here at about 680. All right, let's zoom in on the 1 hour and let's look at those setups in detail. So this is the most recent chart that I published. This was a bearish Gartley pattern when you have this X to A to B to C to D, and the B point rally is to the 38.2 fib, which you can see right here. Should we get a rally up and fail at the 78.6 fib, this is basically a bearish Gartley. And yesterday I did a quick little Google search just to demonstrate how you can pull up those Gartley patterns pretty easily. Long and short of all that is usually Gartley's, bearish Gartley's, the point D, point whatever the sell-off is, usually it's pretty dramatic. So not a big surprise that we've been working our way lower here. On this setup in particular, I've noted the boxes. This is the risk box and this is the reward box. And I mentioned yesterday that, as traders, we have to be very disciplined. We have to understand that our winners have to be bigger than our losers. And really, me personally, I'm a big fan of at least a 2-to-1 reward over risk ratio. So that way, unfortunately in this game, people are obsessed with percentage accuracy. And what I found when I worked with the boys on the floor of the Chicago Mercantile Exchange is that the real professional traders, they're not obsessed with accuracy. What they're obsessed with is this model, where your average winner needs to be bigger than your average loser. So I commented yesterday that, yeah, the trade looked like it was going well. Basically, it was in our favor. But, I would be remiss just to go and pull the trigger and take profits here. Because in essence, really, here's this smaller rectangle. That's a 2-to-1 risk-reward box. And really, when I looked at this trade setup to begin with, let's get rid of the chat here. When I looked at the trade setup to begin with, I mean, really, we need to be shooting for not only the OTE long zone, right? That's where institutions will buy if they're going to buy, but we also have a couple really juicy gaps here. And so, unfortunately, as a trader, we just have to learn discipline and patience that, yeah, the trade's working, yeah, we're making money, everything's looking good, but now's not the time to tinker with the trade. So long and short of it here, that this gray line is that short level, and basically this short trade is just continuing to work. While the trade is working, you can see that momentum is gyrated, volume has gyrated, but we really haven't gone anywhere. I've been making the argument for quite a while that I can't really see a major bullish breakout ahead of this Silk Road auction. So my hunch is that we're probably just going to go sideways here until that event plays itself out. Now, so that's the bearish scenario, and we're still sort of working away on that. 550 area seems to be a pretty good target zone. Now let's go take a look at the bullish scenario and see what things look like from that perspective. So you can see how this bot setup here could potentially be forming, and then the 25% level here is right at this 605 area, right in here. So yes, we do have the bearish Gartley working, and frankly, really as prudent traders, we should probably just leave that working. If, however, you are bullish and we start to see some bullish momentum and bullish volume patterns, then we can start to consider the idea of maybe taking this bot long setup. Still think it's a bit early. The bear is still very firmly in control. As you can see, momentum's rolled over here nicely. We do have a little bit of a double bottom working in the raw momentum reading. So again, I think this really speaks to what we talked about originally, how the market is basically just trapped in this trading range here. But having said that, should we get bullish resolution and we get a nice little buy coming in at or near this 605 level, then it sets up the bot, and we can realistically see a rally up to 680. So that's both the bearish, which is currently working scenario, and the potential bullish scenario that may play out over time. Considering today is the 24th and this auction is on the 27th, and really I think probably the dust won't settle until early next week. My hunch is that we're just going to consolidate and then we'll set up our next leg higher. Just for full disclosure, posterity, the bearish Gartley still working. Where's the short level? Right up in here, 602.41. and really I don't have any cause to go and tinker with the trade until we get at least to this 2-to-1 risk-reward ratio. Now you'll notice, just in closing, you'll notice that we have this bear ABCD working that was confirmed on the move through here, which happened just very briefly. So I could see a bottom come in here at about 575 area. So I'm going to be keeping a close eye on that. Once we get down into that area, the trade will have about $25, $30 of profit, and we'll just keep, we may keep assessing as we go. But I think on balance, really, I'd be best served just to wait for this area in here to get tagged before I start thinking about exiting. All right, that's today's summary, just nice and quick. Hopefully I kept it short, and have yourselves a great day. Oh, and by the way, just so you understand, the new site is coming along quite nicely. The little altcoin space is very interesting, lots of doubles happening there. And if you're following my Twitter feed, you'll notice that this morning I had an interesting one pop up on the screen. All right, have yourselves a great day, and all the best. Bye for now.